It's that time of the year again when me and my fellow clients and friends and Americans have to calculate their income, their expenses, and pay taxes to the US government. And in this video today, I'm going to talk about the top 5 business deductions. And some of these might be things you haven't heard of, and some are going to be things you have heard of. And I'm going to give you some insight and some context on how they apply to you and your business. And at the end, I'll talk a little bit more about how it works for the non-residents and the residents. Obviously, many people on this channel are following me from outside of the US, where you're not paying taxes on your income in the US. You're not paying taxes on how the profits generated from your US company. But for people like me and many of my clients who are residing in the US or have a corporation, you are going to pay tax in the US. So I'm going to talk to all of you together, and this is how it generally works. So the first concept that's very important is that if you have an expense for your business and you can justify it as something that you need to grow or expand your business, that's going to be deductible. Generally, it has to be like solely for business. So the top tax write-off with the LLC is just getting started, and that can be education costs. So when you pay to buy courses or information to start your business, this can also include payment for working with accountants and attorneys to set things up, payments for materials, initial supplies, renting a space, going somewhere to do something. Anything that you can say you needed to spend to start up your business can be deductible. Certain costs like this do have to be capitalized and are expensed over time and not all at once, but they're still deductible, and it's something we can figure out at the end of the year when we're reviewing the accounting. The second one I want to go into are different reimbursements. So there's certain things that you pay for personally that the business uses. The big one is the home office deduction, where generally you can deduct the cost of your home office. The easiest example is you're paying rent. You're paying $5,000 a month of rent. You have a 1,000 square foot apartment, and there's a 250 square foot room that you use solely for an office. Basically, we take 250 square foot divided by 1,000 square foot, 25%, and you get 25% of the total cost of rent, and that's your home office deduction. It's kind of like a reimbursement. It depends how you have the company structured. If you're just a regular American that owns an LLC and you're paying tax on your Schedule C, you don't need to formally do a reimbursement. But if you have an S Corp or a partnership or a corporation, you would need to do some kind of reimbursement. And the second reimbursement is for vehicle expenses. There's two ways to expense vehicle usage for your business. If you're using your car for your business, let's say you're traveling somewhere, you're doing consulting, it's hard to justify it for an e-commerce business that's all online. But if you're using your vehicle for business, you can either expense the miles and track those, or you can depreciate the vehicle. That's the other way. When you're depreciating the vehicle, we get the total value, and then we basically use up the cost you paid for the car over 5 years is the general period. The problem with that is that when you eventually sell the car, there could be gains that you have to pay in the back end, and it may not be as high as the mileage deduction. It depends how much you're using the vehicle. If you're not driving a ton of miles, but it is still 100% for business, the depreciation is going to be best. That's something that we can figure out together when we finalize your accounting. The third thing I want to review are marketing or travel and cell phone and other miscellaneous expenses. Your cell phone can be fully deductible by your business. That's something that you can pay from your business account, fully deductible. Travel, as long as you're traveling for business to see clients, and you can set up your trips so that you are doing business meetings with your board, business meetings with clients, and you can set that up so it is deductible for you. So that's something I'd encourage you to look into, like the best ways to actually solidify that deduction. But it can be deductible, and even if it's not fully deductible, it can be at least partially deductible as long as you're doing business when you're traveling. And the last one is like marketing expenses. Clearly, if you're spending money to advertise your business, those expenses would be deductible. The fourth thing I want to go over here are retirement contributions. So if you're running a business in the US, you can contribute to retirement, and that's an expense. Depending on the type of company you have set up and the type of retirement plans, you can either contribute a fixed amount, which would be a defined contribution plan, which is like a 401k. It's a little over $50,000 you can max contribute a year based on your income, or a defined benefit plan. Those are more complicated. They're like pension plans, but those are determined based on how much you're going to need in retirement. So if you're an older person and you're doing business, generally a defined benefit plan will allow you to contribute much, much more. And I've seen clients be able to contribute up to $300,000 into these plans. And that's all deductible, and it's all deferred until later. And you can invest it and grow it. And then when you take it out later, you pay tax on it like a regular retirement plan. Number 5 is a good one for everyone here. So number 5 is going to be restructuring your company and restructuring payments. So first, for the U.S. residents, if you're in the U.S. or you're a U.S. citizen, if you have an LLC and you're a regular person, you have to pay payroll taxes on the entire amount of profits that you have up to 180,000 or so. If you had an S corp, you could pay yourself a salary up to a reasonable amount and then save that 14% on the difference. It's complicated. There's more to do, but when you're making 50K or higher, it's something to look into, and it's a big way that we help our clients save a lot of money. Now, for my people with international family, I've helped clients restructure their operations. Let's say I have an uncle who I love dearly who lives in Dubai, and he's a Canadian citizen, and he consults with me. I can send him a lot of money for payments. He won't pay tax on it, and neither will I, and he's helping me grow my business so much. And, you know, we have to justify the payment. We have to set that up. But restructuring the operations so that some of the money comes through tax-free channels, it's very, very specific client by client, but it's also a huge way to save money. Let's say that my wife and I don't file together. We both live out the country, and she is not a U.S. citizen. I can pay her for her work to our business, and it wouldn't be subject to U.S. income taxes. So that's very, very nuanced, but it is also like something just to get the gears turning, because I'm talking to clients every day, and people don't realize that there's other options or other things to do. So if you're making a lot of money, or you're making decent money and you're running your business as an entrepreneur, then there's always ways to save on taxes. And if you're in the U.S., one of the most important things to do is not miss out on deductions. And the most important thing out of all this stuff is that you need some kind of system of accounting. If you aren't tracking what's going on, you don't have realistic accounting, you're gonna miss stuff. If you're not on this and you do it all at the end of the year, it's hard to be really organized and do it all correctly. You're gonna miss stuff. It's important to have your own bank account for your business that you use separately from your personal account. I see too many people still every day using their personal bank account for their business, and it's just a mess to do the accounting. They're missing out on deductions, or they're claiming too many deductions, and it's just a higher risk of audit for them. So in summary, you can deduct anything that you use to advance your business. So if you are spending money to, again, travel somewhere on your car, your home office, retirement accounts, all of these are what's possible, but it's only achievable through good planning, good accounting, and making these expenses and deductions and contributions and payments on a timely basis. If you need our help with this, let us know. You can schedule a call, jamesbakercpa.com/schedule, and let me know if you want to see any other videos about this. I hope this was helpful. See you on the next one.